India is in a sweet spot, and I think India will continue to stay in a sweet spot. I don't think that that's changing in a hurry. But the reality is that, if one looks, forget the Indian ecosystem. I think the Indian ecosystem has seen very rapid change in the financial saving mix. If you think about it, as recently as 3 years ago, um, only 2% of financial savings went into mutual funds. That numbers jumped to six. Now, is 6% of financial savings right for the um, mutual fund industry or for equity allocation? I don't think so, especially in a younger country like ours. Maybe that number should be much higher. But these changes tend to happen much more gradually. So I think you might have some leveling off as far as that is concerned. 2 to 6 is a big jump, right? The second thing, according to me, is that 35% of the free float in Indian markets is still held by FIIs. And I think the issues and challenges in the overseas markets are still very high. And as a consequence of that, you might get volatility. And I think the biggest um, direct concern for an Indian context is the fact that if you look at the US, see, the US, adopted this zero rate policy, easy monetary policy, loose fiscal policy kind of after the global financial crisis. But about 4 or 5 years ago, they changed tack and they've gone into tighter monetary policy and looser fiscal policy. Now, the problem is that the aggregate debt is so high that they have to keep on borrowing more and more, and it's actually widening the fiscal even more. So it's become what I call an unstable equilibrium. And the big challenge is that a lot of that borrowing is actually happening in very short term money by the US. I think that once that mix were to change a little bit, you might actually have a situation, a strained situation, even if they lower rates. The long end of the curve might steepen, and as a consequence of that, that's typically the benchmark with which you sort of add an equity risk premium. I think you might have a lot of cost of capital increase worldwide, and you might have outflows from India. Now, remember that we are the most expensive market in the world, so we are that much more vulnerable. I mean, we are one place where people are making money, so the probability that they might pull out more is higher, and that risk is something which is a reality that we have to live with.